Welcome to another instalment of Insights from the Investment Committee. This is where we're trying to make sure that you as our shareholders get to know more about the companies that you invest in. Today I'm speaking to John Coombe, who's the Executive Director of JANA Investment Advisors, and he advises some of Australia's biggest super funds and is an expert in this field. He's on the investment committee for both Future Generation Australia and Future Generation Global. And so we thought he's the best person this time around, although you may have seen her on a video before, to talk to about what's happening in the portfolio at the moment. John, you are a shareholder in both Future Generation Global and Future Generation Australia. And I think the question is, why did you choose to invest in these companies?
I run my own self-managed superannuation account, and I had been a sophisticated investor, as you can imagine, and filling in all the paperwork associated with getting set with fund managers that I knew and wanted to have in my portfolio was really super annoying, to be blunt. And it was so easy just to get my financial advisor just to buy me FGG and FGX. And so they sit as proud parts of my portfolio, and I reinvest all my dividends and love it. It's a fantastic investment for me.
Tell us very briefly the social impact story as you see it. So why is that such a added differentiator for us?
Look, for me personally, I give a lot of money away to youth initiatives, and so that was one of the real draw cards for me. When I was asked by Jeff to come on the investment committee, I was rapt because personally, I think mental health, youth mental health, I think the crisis that we're seeing in the country at the moment it's fundamental. I was talking to a friend on the weekend about this, and it's just touching everyone's lives. Kids we know personally who are going through really difficult times because of COVID and the lockdowns and lockouts of school, etc. It's a passion, and I love it. And I applaud everyone who thought of the idea and have made it happen over the last decade. It's fantastic.
Tell me about the investment styles and how do you see the actual diversification of the companies?
We have a real mix in the portfolio, and that was a deliberate thing, and I'll give Jeff Wilson his due here. So when Jeff set it up, he didn't want just long-only managers. He wanted to have a mix of managers, so we have absolute long shorts, and maybe you need me to explain those a bit later.
No, definitely, we're coming to that.
I know you are. So, but basically we have this mix. Why do we have the mix? Because we want to dampen, particularly in down markets, the return to our investors. And that's another thing that as an investor in the fund I love. I know when we have bad months like January and probably February, then we basically, you can see that we protect on the downside, which is really, really good.
So because you're actually on the investment committee for Future Generation Australia and Future Generation Global, how do you actually decide as a committee what percentage of the money that we have in the companies to invest with these different styles that navigate these different sort of cycles of the markets?
So we sat down and we've established broad guidelines, so much in market neutral, so much in absolute return, so much in long short, so much in long only. And that is our guide rails around which we can put the managers. And then we look for a suite of managers in each of those buckets, because we don't want to have all, in our long only, we don't want to have all value managers, we don't want to have all growth managers, we want to have a mix. In our absolute manager styles, we might want an active manager, we might want someone who's a little bit more quantitative. So it's all about just making certain that we've got a very robust portfolio in every market conditions. But the overriding concern is that we protect in down markets. We really want to protect investors in down markets.
We have obviously a number of fund managers in FGX. Why do we have so many?
Oh, look, sometimes it's just because we can only get a certain amount of money with some of the managers we really like. Like, we've got some managers who are fantastic, and if we could, we'd load up on them. But through their generosity, right? They've given us certain amounts of money that they're happy to take from us. Now, a lot of those managers have closed investments. They have very small amounts of fund under management, like $200, $300 million. And to give us a little bit of that into our portfolio is fantastic of them. But we can't take more, is the answer. But we do, we do try and get as much exposure to the ones we really like as we possibly can.
Future Generation Australia's, the performance has been really solid. I think it's performing personally.
Absolutely beautifully.
And so explain to us the underlying performance comparing to its share price.
How does the LIC trade at a discount?
Yeah.
Right. This is where it comes down to market forces in terms of number of buyers, number of sellers. And so with listed investment companies, what you often see is if there's not a buying pressure, the company's share price will just lag out of lack of interest, right? It's not because the underlying investment's not going well, it's just a lack of market interest. And so that's part of the reason why you guys and Marty go around and talk to the underlying financial planners, is to try and keep the volume of trading going into the stock, because that's how you narrow the discount. More buyers narrows that discount because they're willing to pay up on the share price. I mean, it's a shame that people don't look at the underlying valuation and go, gee, it's trading at a discount, I should buy some more because it's trading at a discount.
Tell us, on FGG,
Yep.
what is happening there? I mean, obviously we have a number of managers in
Yep.
there that are in the news on a regular
Yes,
basis.
yes.
Some positive, some not so positive.
Yes.
So what are you seeing there as a member of the investment committee for Future Generation Global? What's your view? And, in terms of what should shareholders be thinking about in the long term?
So Caroline, I want to assure our shareholders we've been meeting lots and lots of time over the issues with the underlying managers, and we've had lots of meetings in the last two months concerning the performance of some of our underlying managers. We are actively looking at the weights. We actively adjust those weights if we think there's a reason why we should, and we are constantly reassessing each of the managers within the lineup. We've had problems at the absolute manager level, but we've also had some, underperformance at the long only as well. So it's not just one particular style of manager that's impacted the relative performance. But let me just say, when I look at the longer term, because we shouldn't get hung up on short-term numbers, and we as an investment committee try not to do that. We try to look through, try to look at the manager styles, etc., and understand the market conditions to look through. We've just got to be patient. We've got to hold our nerve, but that doesn't mean we don't reassess and look at it. The other great thing is what I talked about before, Caroline. We're still going to pump out a dividend. Two dividends in the year, and I think that's really novel.
Up.
And I really think that's novel, for a LIC to be basically ensuring that we're paying out to the underlying investors.
And I think also what many shareholders know, and what obviously we love, the fund managers work for us pro bono. There's no management fees, there's no performance fees, and we give 1% to create a really important social impact.
Yeah, but they still are delivering, and if they weren't delivering, it wouldn't matter. They've still got to deliver to us, the shareholder, a return above the index, because that's what we're here for. We're here to grow people's wealth over the medium, longer term. So I think they're doing a great job. We just, every now and again, you hit a speed bump and you just got to reassess.
Thank you. Thank you, John. Thank you for your time.
Pleasure.
And
Thank
obviously
you.
for being on both committees.
No problems.
Thanks.